Hi everybody, I hope that you are safe and well and that we can get back to normality very soon, and more importantly that we can get back to business really soon. I've been asked to discuss the detail around the COVID-19 loan relief scheme, which is a partnership between the banks, the South African Reserve Bank and the National Treasury. Look, as soon as the president announced the lockdown, the banks and the government started to look into a scheme where we could provide large amounts of liquidity into the system. The situation is obviously unprecedented. I don't think you'll find it in any of the economics textbooks that have ever existed. And the effects of zero turnover and having no one pay anyone is absolutely devastating to the economy. We have to keep people employed. The effect of huge unemployment on South Africa into an already depressed economy is going to be catastrophic, and we urgently need to get velocity of money back into the system. Therefore, we've worked tirelessly to ensure that the scheme is very broad in terms of where the help goes. It's as easy as possible to access and is also efficient as possible to deliver, which is why it will come through your banks. Essentially, it will be quite a simple process to apply. That will be step one, is that you'll download an application or fill it in online from your bank. Each bank will be slightly different. You will submit it together with a whole lot of supporting documentation. The kind of documentation I think that you're going to need is you're going to have to work at a calculation of what you require for the 3 months in terms of the qualifying expenses, which we'll discuss just now. A detailed cash flow projection if you're able. If you're not, I'm sure your banker will assist you. Any year-to-date management accounts that you have. Obviously, if you have financial statements, it will be good. Proof that you are an entity that's registered with SARS, that you've only applied at one bank, or if you've applied at a bank and it's been rejected, to please give the reasons and explain why it's been declined. And there may be some additional documents. I mean, if you had to ask me, the more documents that you can provide, the better it is. So step one is obviously to apply and to submit with those documents. Step two is that the bank will then do an eligibility assessment. So we'll talk about the eligibility criteria a little later. They'll do a credit assessment in their normal term. We must remember, however, that this is a government guarantee. So the banks take the first loss, but there is a government guarantee. And the banks have thought about and will make these loans quite easily accessible if you comply. Step three is obviously that the loan will be approved by the bank and that you'll have to sign some agreements with the banks. Those agreements will differ with each bank. And step four is obviously that the loans will start to be paid out on monthly drawdowns per month directly to the client into their account. So, what are the eligibility criteria? Firstly, the scheme will be available for a period of 3 months from when each bank signs their agreement with the South African Reserve Bank. The eligible businesses as defined will be any company, statutory body, corporate, closed corporation, sole proprietorship, trust or partnership, association, joint venture, or any similar entity, but it specifically excludes individuals, state-owned entities, and at the moment listed companies. You have to have an annual turnover of below 300 million measured at a group level, and that is worked out for the most recent financial year or the 12-month period ending the 29th of February 2020. You need to have an existing relationship, either transactional or lending with your bank. You need to be in good standing with the bank as at the 29th of February 2020, meaning that you do not have any arrears, or if you do have arrears, that it has been condoned by the bank. You need to be registered with the South African Revenue Service. You need to have no existing capacity to borrow. If you do have existing capacity to borrow, the bank will ensure that you first use the existing capacity to borrow and then give you a COVID loan. So there may be some hybrids between the banks, also between product. So you may have a product like trade finance, where you can only access it to make payments to suppliers. You obviously won't be able to use that to pay things like salaries, etc. You need to be in financial distress as a result of lockdown, and I think that is quite easy to show. But I think as part of your application to the bank, you should explain how your particular business has been affected. And you need to ensure that you have not applied for relief at another bank. Okay, so I thought the next thing that would be interesting to discuss is possibly the benefits. The interest rate of these loans will be priced at prime, and that's for all of the banks. The prime lending rate will apply to the date of the first drawdown and is calculated at the nominal annual compounded monthly rate. The funds will be paid monthly directly into your nominated account which has to be in your company's name. The repayment profile for the loan, and this is very important, is that you will get a payment holiday for the first 6 months, which is interest and capital. You'll pay nothing. However, the interest will be capitalized from that date of the first drawdown. From month 7, the first payment will become due. The outstanding capital and interest from the previous 6 months will roll up, and this will be amortized over the period of 5 years or 60 months. So the idea behind these loans is that we are covering 3 months worth of OPEX and supplier payments, and that over the 5.5 year period, it should be quite easy for the customers once they recover to make those payments. Your business can prepay any part of the loan without any penalty at any time, and that is either through internally generated cash flows or through a refinancing arrangement through another bank. There are, however, some restrictions on these loans. So from the beginning, none of the loan amounts can be used for any distribution to shareholders, whether it be a dividend or repayment of shareholder loans. The loans can also not be used to repay any portion of existing bank debt, whether at the bank that you apply or at any other bank. And until the loan is fully repaid, you also can't pay any shareholder loans or dividends, which is obviously fair. This is government guaranteed, and you need to pay them back first before you can pay yourself. Some other salient terms of the loan is that you can only have one of these loans through an existing relationship at one bank. The banks are entitled to share the information relating to all applications of these loans with the Reserve Bank and with other banks. So that's to ensure that people don't game the system. No amounts that have been repaid or prepaid of this loan may be withdrawn. The loan amount is based on specific operational expenditure, which I'll cover in detail a little bit later. And the proceeds of loan can only be used to pay those approved expenses. These expenses we've classified as expenses which you're required to keep your doors open. So this really is an emergency scheme. The banks may require sureties or guarantees or other security where the credit committee deems it's necessary. The loans will have priority in terms of cash flow, meaning that you have to repay your COVID loan before you pay any of your other debt. We have the right to review any of the quantum of the disbursement profile if new information comes to light. In other words, if you've applied at another bank and been successful, or you are not using the funds for the purpose which they were intended. All loans could be subject to further terms and conditions, which will be contained in the loan agreement between you and your bank. Okay, so the expenses that can be used, or the expenses that the loan can be used for, is salaries and wages. That includes everything to do with your salary and wages, which is your cost to company, your income tax remittances, your pension, your Medicaid, etc. And directors, trustees, members, and other like officers can also be paid with these loans. The loans can be used to pay rental and lease payments, including lease and rental payments due to the bank under any agreements which may have been in force before the 29th of February 2020. You can use these loans to pay utilities, electricity, water, etc., your insurance premiums, other expenses like security, cash in transit, cleaning and maintenance. And very importantly, you can pay your creditors, which are defined as supply chain costs, which mean the direct and indirect expenses associated with local and foreign supply of goods, materials, and services to a business. So it's very broad, including the costs and expenses of importing and exporting goods and materials, including all the logistics and all of the customs, etc. So it is very broad, and it will keep you in business, and it will be able to replenish your supply where you need to pay suppliers and you need to get goods to continue trading. There are no fees and no costs that the banks will charge on a monthly basis. And I think the last thing that I really want to cover is that the National Credit Act will apply to sole proprietors. However, neither the reckless lending provisions, which are Section 81 and 84 of the National Credit Act, nor the affordability assessment regulations of Section 82 of the Act applies, because these loans are considered emergency loans as per Section 1 of the Act. Obviously, given the expected volume, and we expect many 100,000 companies in South Africa to apply because it is broad and it is designed even to go to people who previously did not have lending relationships with the banks. So if you have a transactional account, you are able to apply and you are able to get the loan. So please, guys, you need to be patient with the banks. There is a lot of volume. We know everybody's need is desperate, and we are going to get to everybody, and we believe that there is enough in the system that everybody will get sorted. Also, I think one of the pieces of advice that I may have is maybe time your application for when you think your business will be back in business and when it will be out of lockdown, so that you can get the most benefit out of these loans. Please keep people employed. It is super important. I think a lot of businesses have done well over time in South Africa, and it is our moral and social responsibility to ensure that as many of our employees can stay in business for as long as possible and can get paid. It really is very important for the future of South Africa. Please follow the rules and do not abuse the scheme. The consequences will be extremely serious. Please stay safe. I wish you guys all the luck and hope that this helps you keep your doors open until we're back in business, and that you all thrive and that you all succeed. And I think just the last thing that I want to say is that this too shall pass. Good luck, everybody, and we hope this makes a big difference. Thanks.